All right. Hello, everybody, and welcome to our Tuesday at noon direct funding webinar. So today is exciting because I'm going to make sure that everybody can see my screen. What we are going to be covering today is what you need to get an SBA loan and the steps to actually getting that. So can everybody see my screen here? Perfect. All right, let's dive into it. So my name is Ray Fleming, and I am one of the co-founders of Wise Guys and Ties. You can go ahead and find more information about us over at wiseguysandties.com. But what's needed to get an SBA loan and the steps to actually getting one? So as we dive into this today, what does the SBA actually do? Many of us are always wondering that. And the Small Business Administration does not actually lend money. This is very important for you to understand because a lot of people think that the SBA is actually the lender. But instead, they set the loan guidelines. Their job is to really work for the bank and help the bank understand who actually qualifies for funding. Now, because the SBA guidelines, set the loan terms and the agreements, the rates are more favorable and the terms are more favorable. So because they are insuring it, they're backing it. Think about on home loans. You've heard of FHA home loans. The Federal Housing Administration backs the mortgage loans. And so SBA is very similar to the loans for businesses. Now, also, many folks think the SBA really works for you, but actually they work for the lenders. And it's very interesting to understand that in order to appease lenders, you got to appease the SBA as well. But the SBA says real estate investing, for example, is too high risk for them. Now, of course, if you wanted to get into real estate, we have other lenders and products that you can use for that, many times referred to as hard money or even private money. So as we look further into the Small Business Administration, not every company can qualify for an SBA loan. But for those that are able to, the SBA can come to the rescue and get you funding. But be aware, there's a lot of paperwork. There really is. This is a process. I referenced a home loan earlier. It's very similar. So it's a time-consuming process. But the great thing about it is you do not have to go through this process by yourself. Wise Guys and Ties, we are dedicated to actually helping you. We actually offer free consultations if you're looking to actually do this. And we will actually go through the process with you. And that's really one of the services that we provide. You can work with one of our loan officers and really dive into if you qualify, what you'll need to qualify, where you're at. We help you with all that to understand the process. Now, so they have various what's called CapLine programs and the SBA Express. And I'm going to dive into really the two different programs that they offer today. The SBA lending partners actually make the loans. So this is interesting to understand because like I said earlier, the SBA is not the ones that are actually creating the loans, but they have a group of lenders that they work with who are trusted sources and trusted. You think of it as they're all kind of in one big group together. It's really like their security guard. The SBA is the security guard for the lending institutions. Now, the SBA also offers research grants. So depending on what type of business you're in, many times companies don't even realize that there is a whole lot of grant money out there for businesses. But the question is, do you qualify? And this is something that Wise Guys and Ties can actually help you with. When we get on a consult, we find out what type of business you are actually in. And we start to dive into other things, how long you've been in business, all the basic information, but also what we are always looking for is there money sitting out there that you could actually get now that you don't even realize you could get? And of course, why is that? Why would we do that for you? Well, of course, just to be full disclosure, if we go find you money, we will make some money by making that connection. And that's really the way that this relationship works. So we want to find you funds, because the more money we go and find you, the more money we will actually make. And so that's really kind of our incentive, to make sure that we can get you the highest and maximum approvals for your business. Now, if your company engages in scientific research, development, there is well over 80 to 100,000 grants at any time that are literally being underutilized. There's so much money that just keeps not getting used every single year. So let's take a look at the scores that the SBA wants your company to have. So the SBA uses the FICO SBSS, the Small Business Scoring Service. Now, this is a little bit different than your business credit score and your personal credit score. The scores reflect the likelihood of you being able to pay your bills timely. This is, as business credit is all built around, do you make your payments on time? This is actually a scoring model that looks at, will you be able to make your payments on time? So the score ranges are 0 to 300. Higher scores mean a lower risk for the lender. A higher score you have, the better. Personal and business credit history plus financial data go into that score to be calculated. So you need to have business credit, you need to have decent personal credit, and also your financials as well. And that's what we talk about. It's a time-consuming process, but you're going to see the best rates. And so if that's something that you're looking for, you're looking at wanting to get large amounts of funds for very inexpensive, then the ultimate goal would be to shoot for an SBA. Now, FICO SBSS scoring ranges. For the SBA loans, you will not be approved if this score comes in under 140. It's just something that is, on your personal credit. If you have, under a 500, you're not going to be approved. So having under a 140 is very similar to that. However, they typically set a cutoff as high as 160. Now, if you're not sure where to actually get this score, that's one thing that we also help you do. And like I said, with our free 30-minute consultations, we can work through this for you. We will go through this and we'll really figure out, hey, should you maybe talk to one of our loan officers or one of our financial team members and see if this is the right path. Below that, you'll probably be denied because of being too high of a risk. So we want to reduce your risk. And the chances are good an SBA lender won't even submit your application to the SBA if your score doesn't meet the threshold. I mean, it's kind of a pre-approval rate. And so how do we actually reduce your risk to the lenders? Is by increasing your personal credit score, increasing your business credit score, and also making sure that you got good business structure, and also that your business bank account has been taken care of. You got, if you've been in business for a few years, that you have tax returns, you got profit and loss statements, and that you can provide all that information. So SBA loans, you usually need to show some time in business. The most popular SBA loan for working capital is what they call the 7A. Now, this is approvals and loans up to $750,000. And get this, the rates are usually only 2 to 4% above the prime rate. How phenomenal is that? All owners with more than 20% ownership must, and this is not one of the things that is even negotiable, they absolutely have to provide a personal guarantee every single time. This is the only downside to SBA loans, is that no matter what, if you are an owner, you will have to have your personal credit intermixed. Now, let's say you're in a partnership 50-50, and one partner has good credit and the other partner, several years earlier maybe had a bankruptcy or something like that. You are going to run into a situation that is actually going to be kind of difficult. But the great thing is, this is not just the only product. What we do is we can help you, establish and grow your business credibility and grow in certain strengths in certain areas where we can overcome weaknesses by building up the credibility of your business. So good consumer credit is required. Now, diving a little bit deeper into the 7A loans, you must demonstrate a need for the funds. They don't just want to be giving you money, not knowing exactly what this is going to go for. And they have to sound, it has to be a sound business purpose in mind. I mean, so you got to come with them with a business plan. They're going to want to know, hey, is this for expansion? Is this for equipment? Where are you currently at and where are you projected to go? They're wanting to see this, and that's the SBA's job, is to really see, is this a good investment? Lenders, banks, they hedge their investments. They are not actually risky at all. They try to reduce the risk to literally nothing. And so your business must meet the SBA size standards. And to be considered small, basically within your industry. And of course, depending on the industry, this can range wildly. And so that's one of those things, is each situation is unique. And so in a world where your specific situation is unique to yourself, you really actually need somebody to talk to. You need somebody who knows what it is and can dive in deep with you. And that's why we actually spend a lot of time with our clients, is because we got to dive in deep. We got to understand what it is that you are actually doing, so we know how to best move you forward in a successful manner. If you have to operate for profit, and okay, so you have to operate for profit, and you must have reasonable equity to invest. So one of those things that they want to see, that you are serious. This is not something that comes easy. Because the terms are favorable, they want to make sure it's a sure bet. A company must do or propose to do business in the United States or its possessions. Plus, the company must have tried to use other financial resources. So this is not the first stop. But if they see that you've been building your business credit, you have several trade lines and accounts, your approval rates will go up significantly. These include personal assets, aka bootstrapping before applying. They want to see that you have put some of your own skin in the game, that you have started to do a lot of the groundwork before you've gotten to this point. What that all comes down to is really businesses that have been successful already. And it's one of those hard parts is, well, what do you do if you're just starting out? Well, this isn't an option for somebody that's just starting out. You're going to have a track record of business, but that doesn't mean that if you're just starting out, there's not options for you. The great thing about business and business credit and business finance is the world is so huge, and there's so many opportunities, and there's so many different options. And that is why, this particular path is only one of 27 different ways that we can get funding for your business right out the gate. And if one of those 27 ways doesn't work right out the gate, then we look at building and growing your business credit and helping you from there. So back to the using of the 7A funds. The 7A program allows for loan amounts up to actually 5 million to fund startup costs, buy equipment, etc. Also, using these funds, a company can also buy new land. This includes construction costs, so building actual buildings, repairing existing capital, so restructuring, refinancing, buy or expand into an existing business, so really taking it to the next level. Hey, we need to open up a warehouse. We have a trucking company now. We need to expand and get some more trucks. We need to buy a warehouse. Things of those, refinancing existing debt. I already kind of said that, but buying machinery, fixtures, furniture, supplies, materials. There is so many uses, and it just depends on what actual business you're moving yourself into or you currently have. Now, what are the benefits of going with like a 7A loan product? Well, there's flexibility, longer terms for one. I mean, many times we see business lending that's on a short-term basis. Sometimes as quick as 7 days, it needs to be paid back in a net 7. Many beginner accounts are net 30 accounts, so they have to be paid within 30 days. We're talking years long periods of time, potentially lower down payments versus many of those other financing options. Plus, there are specialized programs for entrepreneurs. So if you're interested in exporting, if you're located in undeserving communities, if you are members of the military community, if you're a veteran, I mean, there is so many benefits out there for our armed forces members and those looking to meet um, your short-term needs really, and need that working capital to get your business over the next hump. Now, if we look at, we talked about longer repayment terms, but most of these loans are repaid on monthly payments of a principal and interest type structure. So you get a loan and then you're set out on a, a 2, a 5, a 10-year payment plan, and it would be a fixed rate loan. So the payments stay the same, just like, many of the loans that you're already used to. And since the interest rate is consistent, there's also ways to be able to budget easier when you know how much you're going to have to spend. However, for variable rate loans, a lender can require different size down payment amount when the interest rate changes. So just as any other type of loan, having a fixed rate loan versus a variable rate loan will determine on what your goals are. Now, on variable rate loans, you always need to be cautious about when the interest rates increase, that will increase your situation. But the benefit is, if there's a lot of room for interest rates to go down, then you can capitalize on those reduced interest rates. Once again, depends on the situation, depends on the state of the economy, depends on what your goals are. Like I said, get on the phone with myself or my business partner, Joseph Smith. You can talk to us. And really, we will be kind of the front line of really seeing what your situation is. This is not, you're not just talking to some customer service representative here that isn't really too familiar with business credit. In order for you to get the best financial direction for your company, you're going to want to get working with the professionals. So let's take a look at what SBA CapLines are. According to the SBA, CapLines is the umbrella program under which the SBA helps small business owners meet short-term and their working capital needs. Loan amounts up to $5 million. Loan qualification requirements are the same as other SBA programs, and also the loan or revolving line of credits are available. So even though we talk a lot about SBA loans, the SBA also offers lines of credit. And having lines of credit, you can start to implement many of the other strategies that we discussed. For example, credit banking, which, by the way, if you are not signed up yet for our weekly mastermind on credit banking, where every single week we dive into that, it's taking place tonight, folks, at 6 p.m. Pacific Standard Time. Get on that mastermind and start to learn how, on your personal side or in your business, you can hack down your debt effectively. It's what we've been working on every single week. And I'm also going to make sure that in the link in the description on YouTube and also in the Zoom chat, we're going to get the link out to you guys so you can register for those webinars as well. So back to SBA CapLines, seasonal line. Let's take a look at that, because this advances. Oh, there you go. If you check out the description in YouTube, it's already there for you. This advances against anticipated inventory and accounts receivables, meant to help with seasonal businesses. A lot of mainly retail, heavily seasonal business. So when we are having, an influx come holiday time, this is really that injection to buy inventory, to fuel the stock that you're going to need or production for your business. Now, let's take a look at what a contract line is. This finance direct labor. We usually call this like the contractor or the builder line. So it finances direct labor, material costs associated with performing assignable contracts. What does that actually mean? Well, if you get a contract to go do some work, we can help you fund that. And SBA loans or the CapLines might be the best way to do that. Builders lines meant for general contractors, builders, constructions, renovating commercial, residential buildings, finance direct labor and material costs where the building project serves as the collateral. We also have the standard asset-based line for businesses that are unable to meet credit standards associated with long-term credit, financing for your growth, reoccurring or short-term needs, repayment from converting short-term assets into cash. Also have small asset-based lines, asset-based revolving lines of credit up to $200,000 operate very similarly to asset-based lines, except that some of the stricter servicing requirements are waived if the business itself can consistently show repayment ability from cash flow for the full amount. This is where you got to start to really understand that to qualify for an SBA, you need the trifecta. You need cash flow, you need collateral, and you need credit. Those are the three. But what if you don't have one of those three? What if you just have credit? Or what if you just have collateral? Or you just have cash flow? Other lending products are available to you. Other directions are available to you. You know, we aren't mixing in personal credit, then we got to go down the business credit building path and get your business an excellent business credit rating. Or let's say that you already have some collateral. We could combine that with some of the other aspects of business finance to get that done. SBA, like we said earlier, is one of the hardest things to get, but it has the most favorable terms. And I want you to understand that there are many, many other options for your specific situation. It just depends on where you're at. And obviously this webinar is general in scope, so we invite you to get on the phone with us and really dive in deep. SBA loans. So let's dive a little bit back into the SBA loans. The SBA Express is a faster means of securing the SBA loan. So if we talk about speed and quickness, some folks call me and they say, hey, Ray, I need money today. Or some are like, well, I need money, you know, I project in about 6 months. That's when we're really going to need a whole lot of it. We're going to be opening a new place. Whatever the situation is, if you need money quick and you qualify for the SBA, then the SBA Express might be what you're looking for. Loans up to $250,000. Rates are usually the same, 2 to 4% above the prime rates. And also it's available, is what's called the Community Express. And this is for low to moderate income entrepreneurs. One thing that is really beneficial about our country, being in America, there are so many programs to help anybody across any walk of life. And if you come from an area that maybe is a little bit rougher than other neighborhoods, if you come from a place where most people don't feel like they have, you know, hope for a better tomorrow, there's options out there. There is opportunities and there is money for you to really be what God put you on this earth to be. So continue to pursue your dreams because I believe in you, Joseph believes in you, Wise Guys and Ties believes in you. And if there's any way, shape, or form we can help you achieve your God-given purpose, please let us help you. Now, the SBA Express, let's get back to that a little bit. SBA Express offers access to credit lines as for well-qualified borrowers. Approvals up to $350,000. Imagine having a credit line for your business that is a low interest rate, that like a $350,000 limit. Interest rates vary. SBA lets banks charge as much as 6.5% over their base rate. That's okay. Like I said, if you understand credit banking, which we have the webinar tonight, then plug into that and understand how to use this to your advantage. Loans over $250,000 or $25,000 do require collateral. So you got to keep that in mind. And the SBA will sometimes look at personal collateral as well. So for approval, you will need to have balance sheets. You'll need to have your income statements, so your profit and loss statements, accounts receivables, collateral. This could be business collateral or personal collateral, articles of incorporation, business license, contracts with third parties, so trade lines, vendor accounts. Even though you may want to jump straight into SBA, the foundational aspects about building your business credibility are going to be necessary. And if you're not sure how to actually build the foundational steps of your business credit, we have many other videos here on YouTube that show you the training. Also, really working with us, you're like, hey, I'm running my business and I don't have time to actually, focus on building my business credit. How do I do it? Because it seems very it takes a lot of time. Well, that's why we've simplified for you and broken it down into 7 quick and easy steps to building your business credit. But let's see if you qualify for some funds first. Also, they want to see that you have some leases available, maybe an office building or some properties, equipment. Also, SBA loans are going to be looking at the SBA 504, which is the SBA's second most popular loan type. Now, when you go to look into this type of loan, it's not just one that we're looking at. We look at to see what you qualify for. Often, the SBA 504 is used to buy land, equipment, or real estate. So we talked about how traditional SBA loans are not, the 7A loan is not necessarily designed for real estate investing. The SBA 504 is when you can actually work towards purchasing property and real estate. The bank will fund the loan. The SBA generally guarantees up to 40%. That's a huge benefit to you and the bank, and that's why the lending terms are so much more favorable. And get this, you can usually get loans up to $1 million. Typically, you contribute 10% of the equity. Now, what are the requirements for the SBA 504? Well, you must operate your business for profit with a feasible business plan and relevant management experience. So going to have to show that you are serious and that you know what you're doing. A company must do business in the United States or its territories. A company must also have tried to use other financing resources. This includes personal assets before applying for the loan. So they want to see that maybe you have already tried other things. And with building business credit, this is an excellent way to show that. The SBA 504 requirements and terms. Your business must have tangible net worth of under $15 million. Your business must also have an average net income of less than $5 million after taxes for the last 2 years. A business must be able to repay the loan on time from its projected operating cash flow. So this is going back to when we were talking about credit, cash flow, and collateral. Maximum loan amounts are determined by the usage, and for land and buildings, the loan term is 20 years. It's a 10-year term, 10 years if we're looking at getting some equipment or machinery, but beautiful, 20-year loans. Can't beat that. SBA loans also, if we're looking at the 7M, this is their microloan program. Now, if you're wondering, okay, what is the microloan program? These are loans up to $35,000 for working capital and growth. Average loan amounts are about $10,000. Funds come straight from the SBA. So this is really the only situation where SBA will actually produce the loan itself. And it's unlike the 7A where funds will come from the bank. It's a very interesting world out there to navigate when you're working with the SBA, and knowing which route to take is going to increase your success. The SBA 7M microloans. Now, the SBA 7 microloan program provides short-term loans up to $50,000 to help small business start up and expand. The average microloan is about $13,000. SBA makes funds available through specifically or specially designed intermediate lenders. These are nonprofit, community-based organizations with experience in lending, management, and technical assistance. These intermediaries make loans to eligible borrowers. It's great to have options, absolutely. Now, some more 7M microloans. Microloans have to be repaid within 6 years and can be used for working capital, buying inventory and supplies, purchasing furniture, fixtures, buying machinery or equipment. Oh, It was a lot to cover, but I wanted to get you guys that information in the 30 minutes that we had to spend today. My name is Ray Fleming, and this is our contact information on the screen. 888-524-9273 is our phone number. You can always email us at bizcredit@wiseguysandties.com or visit wiseguysandties.com. On our website, you're going to be able to see articles on business credit. You can get free ebooks on building business credit. And that is where you yourself can go into our calendar and schedule a time that works for you in your hectic schedule to spend 30 minutes diving into your business on either building business credit or having us help you go out there and see what funds are available for you today. I encourage you to not put it off, because every single day there's programs that are coming and going, and there may be some funds available for you today that if you wait may not be available, in a few weeks from now. So as we are in the state of really lenders are looking to provide businesses with funding right now, you want to take advantage of that. With the uncertainty in the market, I can't guarantee that these products will be around forever. And when the going is good, you better get going. So I look forward to helping you get the money that you need. Once again, here's our contact information. My name is Ray Fleming. I look forward to working with each and every one of you. Good night and God bless.